Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Tuesday, December 18th, 2007. Well, it was quite a day today, and those of you that were watching the video yesterday know we brought up some key points in the video, key resistance levels, key support levels, and so forth, based on where the market may be headed tomorrow. We also strongly cautioned that until we saw confirmation today on the move down, with Goldman Sachs coming out and a bunch of other factors in the market, that we may actually see a move up today. And those of you that know what the market did today, you know that's what happened. And we weren't sold on the drop, and I'll tell you a few reasons why so you guys can get a general idea. Number one, let's first go over the market. The Nasdaq closed up 21.5 points, or almost 1%. The Dow closed up 65 points, or 0.5%, and the S&P was up 9 points, or 0.63%. Now, when looking at the market, there were a few key factors, and we're just going to get right into it here. And there were some bullish things in the market and some bearish things. But overall, you have to take today as a positive, and I'll explain why. Let's first break out the trend tools here, and this way we can draw some lines on the charts and really focus in on what we want to look at. Number one, Nasdaq. This is the daily chart of the Nasdaq, and you can see I have the moving averages in here. We have the 200 right here in the pink, the 50 moving average in the dark blue, and the yellow is the 20 moving average. Okay, now here we have the stochastics, and I'm going to go into number one. Stochastics were near their bottoms after this fall. We needed a technical bounce. All right, anytime they come down that hard, a lot of times you get a little bounce up before a retrace down. Now there were a few key levels broken yesterday that we pointed out in the video, and I'm going to go over those quickly here. Number one, the 20 moving average. We closed as of yesterday below, or the day before, excuse me. We closed the day before yesterday, meaning last Friday, on that sell-off where we closed at the lows of the day, a smidge below the 20 moving average. In that video on Friday, I said, okay, well, let's see if we confirm it Monday. Well, we did confirm it Monday. There's no doubt about that. The next support area was right here. Okay, this is a support area here we pointed out, and that coincides with this gap window right here. Okay, these are two of the same levels pretty much right here. So that was a support area yesterday. We broke through that. Here's the 200 moving average right here. We broke through that as well. Okay, so yesterday we closed at the lows of the day, not only breaking through the 20 moving average, but filling in the gap here as well, which was a third support area, or a fourth support area actually. Okay, so we closed below all these, and at this point I said, hey guys, that's an impressive move down. But let's see if we confirm it today. And I'm going to erase these lines now so we can get a better picture of what's going on in this market. Now, today, we had initially a gap up, then a strong sell-off that took the Nasdaq, as you can see here on this wick, on the bottom tail here, below the low. So should we have closed down here, we would have confirmed the move down, and the next move would have been to here, but we did not close there. Instead, later in the afternoon, we rallied back up, taking out the upside. We did not confirm the move down yesterday because we closed on the daily above the low from yesterday, and we closed right underneath the 200. So while we did not confirm the move down yesterday, at the same instance, the markets closed below 2600, which was the approximate number for the 200 moving average. Now, should we have closed above the 200, I'd be even more likely to say we're due for a bounce. But because we did not, there is a slight favoring to the bounce here going into the holiday week. I explained why. Tomorrow's Whipsaw Wednesday, Options X this Friday, and you guys know how Options X is. Whichever way more people think the market's going, and I have to be on the bear, thinking there are more bears out there than bulls right now after the last couple days, then the opposite will go into Options X. Thus, the move Whipsaw today, where they took negative, got a lot of shorts on board, squeezed them to the upside, closed the market near the highs of the day, and so forth. Okay. So the question tomorrow is, do we continue to move up? Should we recapture this 200 moving average? Then you have to figure we're possibly going to go back and fill this gap. Because remember, now this is a gap on the upside we've just created between these two candles. Between yesterday and Friday, the candle, we gapped down and we did not fill that gap, so there is a gap in that chart. And should we close above the 200 tomorrow, I got a favor going into the Christmas and New Year's next week. With light volume, Options X this week, the Fed in full force here, doing their best. You're going to probably see a near-term bounce before the next wave of selling. And I do think there will be a new wave, folks. We definitely didn't do a double bottom here, so we got to at least test that level. And should we test that level, we'll have to analyze the charts and see if it tells us we're going lower. Okay, so that's the keys to look for here, folks. Again, we mentioned that we expected a bounce yesterday in the video, and the prior day and Friday on the video, and it looks like today we may have started that. Again, we want to see confirmation to the upside tomorrow. Do we move back above that 200? If we start to sell again, and if we close below this level, we could be headed right back for this level, so for the double bottom level. That would be the next support area you'd watch for. But as of now, considering where the market was, and I want to show you this intraday. Here we are. Here we gapped up. Okay, so we had a gap area right here, right? Here's where the market closed on Monday. Here's Tuesday's open, and we basically started selling right from the open. And again, this is my 10-minute intraday chart. So this is intraday now. All right, we sold off right here, all the way back down here. Then we rallied all the way back up and traded sideways into the market close. So you can see how whippy it was. We gapped up, we went negative. The Nasdaq at one point was down 20 points. Then we rallied all the way back up. Nasdaq closing near the highs, about 8 points below the high of the day, and we were up 21.5 points for the day. So again, I really want to point this out here, the whipsawness, and how a lot of, don't think there weren't a bunch of longs going long here. It's almost so interesting because the psychology of the markets is one of the key factors that everyone should read a psychology book or maybe Psychology 101 just to get a sense of people's human psychology, because in so many ways, you know, if you know the psychology of the markets, level 2, and how to read charts, and I'm not talking about stochastics. Yes, stochastics are helpful, but most technical indicators lag. They're taking information from the past and giving you a signal. If you can read chart patterns, you can estimate and be ready for possible moves based on those chart patterns. So those three things are so key to analyzing and trading the markets. And again, here, psychology would have told you a lot of shorts would have a lot of longs would have jumped on board. And in doing so, when you have too many longs, the market's going to drop. It's as simple as that. You drop down, then too many shorts are jumping on board here, thinking we've moved below the low from yesterday. And hang on, let me go point out this. So once we moved below here, a lot of shorts jumped on because they thought, okay, it's a breakdown. But on the daily chart, you have to wait for a close of the daily chart, of the daily candle. So again, shorts jump on here. That signals that too many shorts are on board. We move up, they squeeze the shorts, and then we trade sideways into the close. So a very interesting day overall, folks. Let's look at the ES chart here. And intraday, you can see the moves are much more exaggerated, which I love, because it's a much better learning experience here. And you can see the selling that really came in here, folks. Starting around 9 o'clock or so, we really sold straight down until about 12. Then the rally began, and we really took it up and just took it sideways into the close. But a tremendous rally, without a doubt there. And a decent volume today, too. About 2 million contracts traded, which is average to slightly better than average volume, especially going into the holiday late in this December area here. So that's bullish as well. Now, we had earnings this morning. Goldman Sachs, good old Goldman. All right, here's the Goldman chart, and we had pointed out this triangle yesterday, and we had said we just don't see the market tanking on Goldman because it's kind of the market. That is the market, and everyone knows that Goldman's going to, whatever Goldman does, generally the market will do. Now, Goldman came out with earnings at about 8:30 in the morning, I believe, or maybe 8 o'clock. I'm not sure exactly at what point, but all of a sudden I saw Goldman dropped to 203, then rallied to 214, taking it positive pre-market, and then it kind of sold off slow. Once the market started to tank, it went negative. It did rally towards the end of the day, as you can see here. Had a major drop, and then went sideways to up most of the rest of the day. Decent move. $7 loss on the stock with earnings is not horrible. Trust me, that's fine. They did okay in earnings, nothing spectacular by any stretch. I think the market obviously expected a little more or had factored in a little more, and that's usually the key, folks, is that it looks like it was holding up here on this sell-off, and that was factoring in decent earnings. And when they had, decent earnings, but they didn't blow it away, at that point, a lot of sellers came in and said, "Okay, we gave it a shot. Sell." And that's why many times you see a stock tick down. Now, also, Best Buy came out with earnings today, and they were actually pretty good. BBY is the symbol here. And here we go. Initially, we saw a sell-off. First, again, I was watching when the earnings came out, and the stock jumped from 51 and change to 53 and change. Then all of a sudden, it started to get very weak, just like Goldman, and sell off, and it went negative $1.50 down to about $49, a little below 49. Then later in the day, again, it started this massive rally with the rest of the market closing up about 50 cents. A tremendous move up, and you just got to like that move overall. There are a couple stocks out there I'm watching. OSTK is one of them. On the daily chart, very oversold. was up 57 cents today. In the chat room, I've been mentioning this since Monday, since yesterday, that I loved it, and we actually had a small position overnight. Obviously, I don't disclose those on the chat, on the videos, because it's not fair to everyone else that's in the room paying. But we did have it, and we did sell it for about a slight profit, or about flat here today, as it went a little higher here in the day. I am looking as a swing trade. I still love it, though. Look at how much room it has to run back to that 20. It could easily go back to about $17, $18. All right? Again, not in the position, so don't worry, guys. You're not missing out on anything, and I'm not in it, so don't worry. And again, these are just for entertainment purposes, so don't take anything to heart that I say. Always consult your financial advisor, and that is always much better. All right? Other than that, an interesting market today. You got to favor the upside here now. I hate to say it, but you got to favor the upside. And I really don't hate to say it, because I love the upside market, because it's a great trading market, and we should do very well in the chat room should we get this little bounce into the holidays. But again, we won't know until tomorrow when we confirm that move up today. Have a wonderful day, guys. We'll talk to you tomorrow.